TFNN. Headline News Update. Here's Tom O'Brien.
Hi everyone, Basil Chapman sitting in for Tom O'Brien. Let's go through the numbers. The Dow's down 180 at 18,145. The S&P is down 23 at 2135. The comp index is down 43 at 5168. You've got gold up $2 at 1327. The dollar at this particular point is up 33 cents at 95.43. Key metrics, we've got the crude oil. Oops, let me get it right here. I'm sorry. Crude oil is, in fact, down 82 cents at 45.48. TLT, that is bonds. The Lehman 20-year T-bond fund is down 7 cents at 135.50. Let's go through what we're looking at here. The VIX index, which I consider to be a very important tool, is trading at 17.04. It's up $1.88. It spiked up the other day to 20. That was yesterday, 20.51, and then plunged towards the close and closed in the 15 area. Now it's up 2 points from there at the 17s. Once you're in the 17s, as far as I'm concerned, that is usually triple-digit potential for triple-digit down. So now if you're looking at my charts, the left side is the daily, this is the weekly in the middle, and on the right is the monthly. Let me just go through parameters that I think are very important this week. The Dow is giving back a chunk of the gains that it made yesterday. It's trading at 18,128. If it was to break underneath 18,100, there's a really good chance it's going to try for the 18,085 low that was made yesterday. Once it does that, the weekly chart is already starting to see the technicals, the moving averages turning down, and I suspect that we're looking at lower lows to come. Most importantly, it's on the upside that we've got to look at as very strong resistance. The very strong resistance in this case is somewhere in the 18,280s to 18,330s for the Dow. And in the S&P, SPX.X, there we go. The S&P is down 25 points. This is after the Friday smash. The Monday sharp turnaround, but that was an emotional turnaround. In fact, there wasn't any real validity. It was news that propagated that extra move to the upside in the afternoon. So we're giving back a chunk, and this is, I call it a sandwich effect. If you're looking at the left side, this is the day. Look at that strong down red bar, and then you get a strong up green, and now you've got the sandwich on the other side, the red. If this red continues to be weak all day and it takes out the low of Friday of 21.2781 in the S&P, we're going to go quite a bit lower. As it stands right now, this is a very important consolidation phase after rallying so sharply. We're looking at the TLT giving us clues as to the interest rates. And the interest rate, if you look at the TNX, which is the 10-year T-note, it is trading at 16.80, and just a few days ago it was in the 15.20 area. So this is a big move. In the weekly chart, you can see it's just another little bounce. It's the monthly that's going to be really important, the one on the right. And that monthly chart is saying that we've got to be very careful, because if, in fact, this 10-year, which is trading at 16.79, 1.67%, goes to the 1.73 area, then we have a change in trend in the yield that is going to be quite significant and could last a lot longer. So that's what we're looking at there. High-grade copper, which for us is always something just to keep in mind, has had a nice little spike from yesterday's low, but is still only within a containment area. And if you're looking at gold itself, trading right now at 13.27, now it's only up $1.80. It's really stuck in this trading band, and the weekly chart suggests that the consolidation could continue a little longer. And we'll just go back to the bonds for a moment. The dollar. The dollar is acting quite well, but it's still only within a trading band. So those are the key metrics. The dollar really needs to get to 96 to start saying it's going to go very much higher. This is Basil Chapman sitting for Tom O'Brien. This is the 10 a.m. update brought to you every day by Everbank. And for more information on the products they offer, call 855-750-4051 and visit everbank.com at TFNN.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focus Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.